I can capture this and we will start. Well, guys, good morning. My camera is not working this morning. What a shocker. It's either my camera or my speaker, one or the other. But good morning again, everybody. We are 3 days away from the open enrollment starting. And we've got a lot of anxiety going because we know what's going to happen. So I'm going to set the stage here for Phil from Allstate Health Solutions. And here's the stage. Stage is this, guys. We know two things are happening. Carriers have increased their rates. I had a list anywhere between 20 up to 40 to 50% of rate increase that they asked for. So that's one storm. Okay, here's the second storm that is creating the perfect storm. The second storm is that we lost the enhanced subsidies. Okay, so we didn't lose subsidies at all. We just lost the enhancement that Biden put into place with the American Rescue Plan back in 2021. So what he did, what that administration did, is they increased the amount of help that people were going to get. And more, he increased the level of instead of just 400%, he increased it and got rid of the cliff. Well, new administration, new rules, new it's not like they changed it. These subsidies were already set to sunset this year anyway. So now in our government, we're experiencing a shutdown. We've got the Democrats holding the line with nope, we want a continuation of those subsidies. And then you've got the other party, the Republicans, on the other side saying, oh, hell no, we're not going to do that. So we'll see how that plays out. But for us agents and our insureds, here's what we're seeing, guys. We're going to see some craziness with renewals. And this is what's going to happen. Some people are going to have no choice but to deal with the renewals because they're sick and they're receiving treatment or they're going to be receiving treatment. And then you've got the healthy ones that are going to say, no, I'm not going to pay that insane amount of money. Find me something different. And this is where Phil from Allstate Health Solutions can come in. And the first alternative for people that are not going to want to take an ACA plan is going to be short-term medical. That's going to be the first alternative. Before you do anything else, that's the step that you go to. And so with that, Phil, let's talk about short-term medical, some of the rules, some of the relaxation of the rules that we now have, and how we can take care of those clients that are not going to renew with ACA.
All right. Well, that was a strong lead in. Thank you so much. Welcome, everybody. We're pushing up against the start of ACA enrollment. Thanks for taking your time to be here today. Can you see my screen here? Are we
Yes.
looking at yeah, okay,
Yep.
great.
We
All
got
right,
you.
awesome. So, yep, I'm going to help you discover where the short-term medical is a good fit, who it's not a good fit for, what to look out for, all the things that you need to be comfortable. So let's just take a look. This is my team. Um, we have this team of 4 people dedicated to supporting your sales. So if you need help, please reach out. If you need something between now and Saturday, please hit us up for whatever you're looking to take care of and get comfortable with. So we've got a lot of insurance here at Allstate. Today we're talking about the short-term medical, and then we're going to be talking about a guarantee issue accident plan that has 2 riders that are going to help your customer not have to dip into their pocket for $10,600 if they're on a bronze plan next year. And we also have a very robust senior product offering with the newest product. It's not even, well, it is listed here at the bottom, senior indemnity. We now have a guarantee issue, senior indemnity to age 74 that pairs well with Advantage Medicare Advantage plan. So that's what we have, but this is what we're here really to talk about. So you folks are probably aware of a lot of these things. Luis just talked about the loss of the enhanced subsidies. We're also going to see more closer look at income verification. So you're going, and I hope this doesn't happen, but there are going to be some people who can't prove their income for one reason or another. They're self-employed. They just can't give enough information to get the go ahead to be part of the ACA. Obviously, premiums are increasing this, for next year, and it remains to be seen whether CMS is going to enforce the $5 minimum premium responsibility. It remains to be seen what the official dates of open enrollment are beyond what you're looking at, based on kind of a almost like a late start this year. So that's what you folks are going to be dealing with, and we're here to help you with some of the customers that there's folks that are going to stare across the desk at you this year and say, I can't afford $3,200 a month to insure my family. And if they're telling you other things like, hey, I hardly ever use the insurance, that might be a good opportunity. So here's how we got here. About 2 months ago, CMS said they were not going to enforce the 2014 rule on short term medical that truncated short term medical at 4 months with any one carrier in a 12-month period. We also have some exciting things that are coming down the pike today that are available for new business customers. One of them is we offer coverage up to 36 months in most markets. Texas, I know some of you are sitting in Texas right now. Texas, we can do up to 12-month policies. So we have a new drug card that I'll be talking about. It's a zero copay for up to 800 different generic medications, and it covers pre-existing conditions. So I'll get into the details of it. And then obviously here at the bottom, it's just talking about the longer periods. All right. So if you're new to short-term medical, good fit customers are here on the left. They're folks that are going to tell you things like, hey, I'm paying too much and I hardly ever use it. They're going to be people who would take the premium savings and hold it in their pocket. They're not going to go out and spend it because they know they may need their premium savings versus the ACA to cover their out of pocket on their short term medical. Not a good fit customers are on the right-hand side. Those are folks that are worried about the limitations of a short-term medical plan because the short-term medical doesn't cover the same as an ACA plan. We'll talk about that. Maybe they have ongoing conditions, but this is really what I want to tell you. If you have a customer who's in a gray area, you're not sure if their health history and their health needs are a good fit, it's okay to write an ACA policy when it's in a gray area. It's okay. You'll know when it's a best fit customer, and hopefully it'll be clear as we go through today's presentation. So we cover office visits on all of our plans. We offer unlimited urgent care visits. We have multiple drug options. We offer coverage as soon as next day. If you do a next day effective date on short-term medical, there is a 7-day wait for sickness benefits to kick in. Conversely, if you push your effective date out 8 days or more into the future, there is no waiting period for sickness benefits to kick in. All right, so we have many different plan designs. Let's take a closer look. Our richest plan offering has a $5 million maximum per coverage period. These plans are called copay enhanced. And you can see here, we're showing the 6,000 and 8,000 100% plan, but there are some additional deductibles and coinsurance options that you'll see in the copay enhanced, and it does vary a bit by state. If your customer purchases the copay enhanced plans, they're going to enjoy a $40 primary copay and a $60 specialist copay for in-network visits. And they're going to get a $10 generic copay drug card, which does cover pre-existing conditions. So I just want to be clear on pre-existing conditions. So Let's pretend that you have a customer that has high blood pressure. They buy our short-term medical plan. Let's pretend they're in Texas and it's a 12-month policy. The high blood pressure isn't covered because it's a pre-existing condition under the medical plan. But if your customer buys this copay enhanced plan, the drug portion will cover pre-existing conditions. One note of caution on the copay enhanced plans, your customer only gets two copays per family member for a policy that lasts 6 months or more. So in my opinion, the copay enhanced is really good for someone that wants a $5 million maximum. Not really so good if somebody loves copays because you only get two per person. It's just not a lot of copays. Hopefully that makes sense. This is where I think the smartest money is in our plans that we refer to as enhanced. I'm going to run some quotes when we're done with the slideshow, and I think this will make more sense when you see it in that setting. These plans all have $1 million maximum. We still offer very rich coverage. You can do a 2,500 deductible, 100%, a 5,000, 100%, all the way up to 25,000, 100% if you've got someone that really wants to save premium. Another way to save premium is you can do a 50/50 or an 80/20 co-insurance. If you're paying attention and you're looking on the screen here, right here, the top middle, the out-of-pocket on an 80/20 and 50/50, they're the same. So God forbid your customer gets hit by a cement truck, they're going to be out of pocket $7,500, irregardless of whether it's 80/20 or 50/50. So all of our plans cover office visits. If your customer takes the copay feature, they're going to pay the copay. If they don't take the copay option, each doctor visit is going to be subject to the deductible and or the coinsurance. If they're at a network doctor, and the network is really the best part of our plan. If they're at a network doctor who's a non-specialist, your customer could expect to pay around $70, which is the discounted amount for a non-specialist office visit in network. I mentioned the urgent care, it's unlimited earlier. The $50 access fee is to walk in the door and get diagnosed. If they're running expensive lab work or testing MRI or CAT scan, those charges would actually go to the applicable coinsurance. So if you're talking to somebody who's like, hey, my kids are in the urgent care multiple times a week due to sports injuries, you may want to consider promoting a 100% coinsurance plan. And that way, the $50 is all they'll ever pay because we waive the deductible for charges beyond a regular office visit. All right. And then at the bottom, we do cover diagnostic x-ray and lab benefit, subject to the deductible and the coinsurance. Yeah, let's see. Okay. And I mentioned this earlier. The best part of our plan is the Aetna PPO network. So it's turned on nationally for service. So the Aetna Open Choice PPO network is going to have all of your centers of excellence. So Sloan Kettering in New York, Johns Hopkins in the DC area, Cleveland Clinic, Mayo Clinic in Ohio, and MD Anderson in Texas, which is America's best cancer facility. And then, of course, if you're in the Western United States, we also offer the Cigna network. So don't take my word for it that the Aetna network is a good network. I know this is a long web address. And that, of course, you can also look up providers in our software, but very comprehensive network. It's very different than a localized ACA plan network that you see in most parts of our country. All right. All right, so let's look a little deeper at the details of these plans. So we offer what we call internally renewable plans and consecutive plans. So a renewable plan can last up to 3 years in a state like Florida. The coverage, the differences between renewable and consecutive is this. If you buy a renewable plan, you have a choice of locking in the rate for up to 2 or up to 3 years. When your customer locks in the rate, their monthly payment is going to be exactly the same every month for up to 2 years, up to 3 years. What you need to know about the renewable plans is the coverage period maximum does not reset. So, in my opinion, our enhanced plans are the richest plan or the smartest money plans. They have $1 million maximum. So if you lock in for 3 years on a renewable plan, you get the benefit of having the exact same premium for all 3 years. Um, I guess I'll just call it a takeaway. The takeaway is that the coverage period maximum does not reset. All right. Consecutive plans last up to 2 years. And with a consecutive plan, the first year and the second year have a slightly different monthly premium. And your customer will know what both years' premiums are going to be at the time that they enroll. Other important things are on the right-hand side here. We don't cover pre-existing in the first 12 months of a multiple policy year. The pre-existing condition clause drops off after the first 12 months when you have a multi-year plan. It looks like we might have some questions in the chat, so I'm just going to quick check the chat.
Yeah, they want to know, does it cover outside of the US?
No, only incidental trips to Canada. That's it. We do offer travel medical insurance through International Medical Group. So if you do have inbound, outbound people, that might be an option. The other thing, though, that's important to note, and this is probably a good time to let you folks know, is we'll cover anyone who's in the United States legally. Um, we don't ask for social security number. We don't ask for green card. The only stipulation, and it is a question on the application, it says, is your customer in the United States legally? So we will take foreigners. We will take foreign students, foreign travelers, but we just don't have the ability to cover people out of leaving the country other than if they're in Canada. All right. Hopefully that answers your question.
Yeah, no, and I
In
will tell you, I'll add a little bit to the travel because I do offer it. So if your customer is going on a trip to a certain country, there are coverages that can be bought for the amount of period that they're going to be gone. And so you buy a time frame, you buy where they're going to go, and then you're going to buy a benefit amount. 50,000, 100,000, or X amount. And that's what's going to determine the premium. So yes, typically when they're traveling, I recommend that they get these travel insurances because something does happen, you're going to wish you had it.
You're darn right. I never leave the country without travel medical insurance. It's dirt cheap. Last time I went to Jamaica, thank God I'm not going to Jamaica today.
I know, yes.
Uh, I was in Jamaica for a week. The premium was like $75. And a lot of people don't know, just one more word on this. In a country like Mexico, they have two different levels of hospital. They got one for the people with insurance and one for the people that don't have any insurance. And the care is drastically different between the two hospitals. All right, so back to the short-term medical. In most states, but not all states, we're going to force your customer to join what we call our life association in order to get the short-term medical. The life association has a $15 a month fee. It's included in the rates we're going to look at in a few minutes. There's a lot of benefits that come with the life association. The only ones that I think are worth mentioning to you folks are number one, it gives your customer a telemedicine benefit that's free to use. So they can call a doctor instead of leaving the house for most conditions, not all conditions. It also offers active and fit. So with active and fit, and the price just changed. So active and fit is now an additional $28 versus this 25. And so for additional 28 bucks a month, they can join a gym. And there's names you've heard of all across the country. The other two things that are worth mentioning here is it comes with Allstate identity protection. I don't have to tell you folks how hard it is to protect your identity these days. Um, it's certainly a high value and it's included in this membership. And then the last thing is this is where the customer would get their outpatient discount prescription drug card that does not cover pre-existing conditions. Okay. So this is what we're dealing with this year in open enrollment. So all of the dark blue states are coverage up to 3 years. The yellow states are up to 12 months, with the exception of North Carolina. Unfortunately, North Carolina made a decision to stay with 4 month maximum, and we didn't have enough time to put together what we did in Texas. Gray states, we have no product, and green states are up to 6 month states. So hopefully a lot of your marketing is in the yellow or dark blue states. Okay, so one of the cool things about our short-term medical is we will do child-only policies as long as the child's 60 days or over. If you find yourself breaking up a family, it's a pain in the neck to break up the family, but if you find yourself having to do that, put the parents that might have more heavy ongoing medical needs on ACA, possibly consider putting the children on a short-term medical. You can certainly do that. If you add a child to a parent's plan, or if you have a child on a parent's plan, we cover through age 25, just like an ACA plan would. So-
Phil, I want to add to that. So I've done this before, guys, where one of the spouses has a condition, but the other spouse is super healthy and the kids are super healthy, and they just don't want to do an ACA plan for the whole family. So you can break it up. Now, the actual process would be this. You would put all five on the app, but only, well, if they're going to get subsidies, you have to put all five of them on the app and only insure the spouse with the condition and see if they qualify based on their income and household. If they
Yep.
are not going to get subsidies, then you can just write that spouse all by themselves. Put the spouse on the ACA plan by themselves, no subsidies, and then you can put the healthy spouse along with the other kids into a short-term medical plan.
All right. Yeah. So, and this is the year you might see yourself doing that more than previous years. All right. So, there's 4 health history questions for the short-term medical, and we're going to take a look at those questions. It's simplify issue, meaning if you check no to the 4 questions, we automatically issue the policy. In addition to the 4 health history questions, though, we do have a height weight. It's not a chart. It's just we won't take males over 300 or females over 250. We do offer a guarantee issue short term. We just don't offer it in every state. And just a point of caution on the guarantee issue, it's guarantee issue up to 12 months. We don't offer multi-year guarantees for guarantee issue short term. Even though it's guarantee issue, it still won't cover pre-existing. So, the guarantee issue would be for someone, maybe you run into someone in July who woke up, decided they need health insurance today, and they haven't had a life event, right? Without a life event, you're not able to buy an ACA policy. All right. Oh, here are the health questions. So we can't take anyone who's pregnant or an expectant father, right? Don't call and say, hey, the wife's someplace else. We just want to cover the husband, the wife's pregnant. We can't do that. The next, for those of you who are new to short-term medical, it does not cover pregnancy. That's why it's less expensive. One of the reasons it's less expensive than an ACA plan. We won't take anyone. The second question here, we won't take anybody in the last 5 years that had AIDS or HIV. The third question basically just says, hey, did your doctor tell you need surgery, treatment, or testing that hasn't been completed yet? Those are pretty easy questions. This is the big one. This is the fourth question. This is going to knock out, and it goes back 5 years. It's going to knock out stroke, heart, cancer. And the reality of it is, if you have a history in the last 5 years of stroke, heart, or cancer, short-term medical is not a good fit for you. The other thing to keep in mind is the questions go back 5 years, But using cancer as an example, like a lot of times someone will call and say, oh, they had cancer 8 years ago, right? Seems like they might fit because it's outside of the 5 years. But the reality of it is even if you had cancer 8 years ago, typically you're not released from care. Doctor says, I need you to come back twice a year to check, see if the cancer came back. So just be careful. The other things that trip people up here is diabetes. We just can't take anybody with the word diabetes in the diagnosis. So gestational diabetes, pre-diabetes, we just can't take that. And then the other one that sometimes screws people up, messes people up a bit, is neck, back, or joint replacement. So sometimes people just forgot they got their knee replaced 10 years ago, right? So this is the one question you want to take the extra time with your customer and make sure that they can truly be checking no to that question. All right. So we do offer preferred rates. So preferred rates pull the rate down 20% under what we call our standard rates. So if you have a customer who's in pretty good shape medically, they could save 20% when they apply for preferred. So the preferred qualifications are a little tighter than our normal qualifications. So in order to be eligible for preferred and save the 20%, the customer has to have had health coverage 9 out of the last 12 months. We don't ask for proof, and anything counts. If your customer thinks they had health insurance 9 out of the last 12 months, check yes. If they had a religious sharing plan, check yes. All right, no tobacco, no DUI or moving violation more than one in the last 2 years, can't own or lease a motorcycle, and cannot be taking prescribed medication for blood pressure, cholesterol, anxiety, depression last 5 years. And then preferred has a lower threshold for height, weight. What's important to note is that we do run a prescription check looking for these specific medications you would take for these specific conditions here on the right. So what you don't want to do when you're applying for preferred is make your customers sound like they're definitely going to get it. It's rare, but it does happen where we make a counter offer of standard. So just don't do that to yourself. You tell the customer, hey, we're going to apply for preferred. I think you're going to qualify. It's not a guarantee. As you start guaranteeing stuff, then you're reselling it in the very minor chance that you get a counter offer. All right. So only the primary applicants are eligible to be preferred. It's not for children, dependent children. This is a very important slide. Short-term medical is a lifesaver for the right person. We have agents that buy this for themselves. We have agents that have contracted cancer, serious stroke, heart attacks while they're on our short-term medical plan. And that's where we pay the best, right? We're not going to do good with cosmetic surgery, but neither is an ACA plan. Not going to do good with maternity. I strongly encourage you to read the entire brochure and make sure that anyone that you put on the short-term medical, that they read their policy. If they can't read the whole policy, please just have them read the exclusions so they know what they're getting themselves into, because it's not a like for like between short-term and ACA. But the good news is there's a ton of premium savings. And that's what I was saying earlier, is that the best fit customer is going to remember that they save the money and hold on to that money in the event that they need to come out of pocket for covered or not, even non-covered charges. All right, we offer any day effective dates. A customer can pay via credit card or bank draft. The bank draft can be out of the savings or the checking account. The initial payment down here can be any day between the time of application, but before the effective date. So if you're trying to not have a customer double pay their existing ACA plan and pay our premium, you can push that first draft all the way up to the day before the effective date. And by the way, you can quote January 1st business for short-term medical right this second. You could write one today if you needed to. So if you know somebody isn't going to be a good fit for the ACA, you could put that thing to rest today. All right. We do offer a public-facing website, allstatehealth.com. If you click agents and brokers and scroll down, we have marketing materials for every state, both brochures, flyers, brochures in Spanish. We have quite a robust offering. If you're an existing customer and you click existing customers, they can scroll down a bit and pull down claim forms for all of our products with the exception of short-term medical. So it makes it real easy. So I also want to talk to you today about what we have. It's an accident plan called the Plan Enhancer. And it has these riders. It has both a cancer, heart, stroke, and a sickness hospitalization rider. And folks, this is your second opportunity. So the first one is short-term medical for people who fit the criteria we just talked about, or can't afford a full-blown ACA with no subsidy. Your second opportunity is this, the Plan Enhancer. This product stands alone. It doesn't have to be sold in conjunction with a short-term medical. This plan is an attachment product for ACA customers. And I'll show you why this is important. So the Plan Enhancer is an accident plan, and your customer can pick a per accident benefit that ranges from $2,500 to $17,500. And we just added a level of $10,600 that would gap a bronze ACA plan. So this pays cash direct to your customer, is guarantee issue. Now there's a lot of acronyms here, so I'll just tell you what these acronyms are so you know. AME stands for accident medical expense. CHS stands for cancer, heart, stroke. And SIP stands for sickness, hospitalization. Okay, so let's look at a little more detail so this can make sense to you if you're seeing it for the first time. All right, so this is how it works. Let's pretend that I buy a $5,000 benefit and I have a $4,000 accident. I'm going to get the lower of those two. And then the second calculation is we base the accident payout on whatever the billed charges were. Billed charges would be for, let's say you have a customer that doesn't have primary insurance. They could only afford this accident plan. Whatever the bill is if it's lower than the benefit amount that they picked, we're going to give them that money. The second bullet point here is for a customer who has primary health insurance. Let's pretend this customer has Blue Cross Blue Shield of Texas. They're going to send us an itemized bill along with their explanation of benefit, and whatever the discounted amount with Blue Cross is, that's how we'll calculate our payout. And then the third one is usual and customary. So whichever one of these three is the lowest is what we pay out. The usual and customary is fair. I've never had an agent call and complain about it. This is a lot of detail on the accident payout. All right, so the cancer, heart, and stroke rider is going to match the accident amount. And this will make a lot more sense when I run a quote in just a few moments. So the cancer, heart, stroke rider is going to pay out on a first ever diagnosis for cancer, covered heart attack, or stroke. Now, the way that we make a guarantee issue is there are waiting periods. So you're going to tell your customer, don't get cancer in the first 90 days. Don't have a heart attack or a stroke in the first 30 days, and you're good to go. You're going to need to let them know that so that they're not surprised. The sickness hospitalization rider is going to do this. Let's say I pick a $5,000 accident benefit. Once per year, if I'm sick and I'm hospitalized, I get that $5,000. Actually, I'm sorry, it's two benefit. It's one benefit per person, a max of two per family. The sickness hospitalization rider does have a 30-day waiting period. It can't be sold standalone because it's a rider on the accident plan. So if your customer, Breeze Air, they got a credit card and they've got a $10,600 out of pocket or even lower, this is a product that can help them not dig into their pocket for accidents, cancer, heart, or stroke, or sickness hospitalization. So this is our premier attachment ACA product.
And
All
Phil, I'm
right.
going to add to that that it 100% is my go-to.
Yeah. Right. So if you're new at having the conversation, like if you're just used to promoting the ACA plan, and trust me, in a normal year, just addressing the subsidy and getting the right plan with all their doctors and their medications, that's hard enough. If you're in the habit of only ever doing that and you wanted to break the ice here and you're not sure how to start the conversation, I always like just to ask, hey, Lewis, who's your hospital plan with? Who's your accident plan with? Right? And then we can have a conversation about it. But just know there are some exclusions and limitations. So even though the plan covers first instance only of cancer and heart stroke, it does have a 24-month pre-existing condition. Um, there's a 90-day wait for cancer. There's a 30-day wait for heart stroke in the states that you see here. So it's not buy it and use it tomorrow. So you need to be aware of these things. The sickness hospitalization has a 12-month pre-existing condition. It does have some exclusions. These are real common exclusions. These are the same exclusions right here. These four right here as an ACA plan. So nothing weird, nothing unusual. Active war, ACA doesn't cover that either. All right. So this is your availability grid. Anything that's light blue is an approved state, including Texas and Florida. All right. So let's see how this all works together. Let me get out of this. Okay. All right. So this is our quoting system. Let me see if I can make this a little bit bigger. There we go. It's a little easier on the eyes. All right. So this is a fantastic quoting system. I have this set. I picked tomorrow as the effective date, but let's just do the first of next year because I was telling you could do that today. And we will, let's see. Yeah, that's fine. Hold on. So we're going to quote today a female who's 38 years old in Texas. Put in the demographic information. I'm hitting quote now. And you'll see here on the left-hand side, there's a navigation menu of all of our different products. So short-term medical is not the first one that comes up. But what does come up here before I can see rates is I've got to answer those preferred rating questions. So I must say non-tobacco. Non-tobacco is anyone who hasn't used tobacco in the last 12 months. Looks like we have a question. Let's see.
Yeah. Question
If
is,
there's a reoccurrence, no, it's first instance only, Liz. So and that's the only way we can make a guarantee issue. If you've had cancer, heart, or stroke in the past, it's not covered. All right, so we'll say yes to the coverage 9 out of the last 12 months. I'm just going to put in what I would consider a normal height and weight here. And then there's a rewrite button. So we do charge a $35 one-time enrollment fee. If you have a returning customer and you check yes to this, they don't have to pay the $35 enrollment fee again. And this also alerts us to the fact that it is a returning customer. Now, if you knew your customer wasn't going to get preferred, you could go straight to standard rates, or you could answer a few more questions. Speaking of questions, look, we might have another question here. Okay. Oh, Liz said thanks. Oh, Liz, you're welcome. All right. So let's just continue. We'll answer a few more questions on preferred. They'll own or lease a motorcycle, and no high blood pressure, cholesterol, anxiety, or depression, and no more than one moving one, not more than one DUI or moving violation in the last 2 years. All right, let's look at the preferred rates. All right, so most of the time you're going to click this box in the middle because most people pay monthly. Okay, and what you're going to see is there's a drop down, and you're going to see, oh, we're doing this in Texas. So, all right. I forgot Texas doesn't have the longer range policies, but let's just do coverage up to 4 months. Now, This is a 12-month solution. We have two other insurance companies that pick up the last two 4-month periods of the year. But when you're enrolling, you're just going to be here. These are the enhanced plans that we talked about. So these are the ones that have the $1 million maximum. And I think for this young lady, I'm going to do a 5,000 deductible, 80/20 coinsurance at $275 a month. I'll go click add and it will create a cart. Well, before we can see the cart, we got all these pop-ups. So let me tell you what these pop-ups are. So this first one is Recuro. So Recuro is the drug option that covers pre-existing conditions. And for this, let's just call this $10. For a $10 upcharge, your customer gets to pay zero copay for up to 800 different medications, including birth control. They also have another option of buying up to virtual behavioral health. So this would be counseling, could be mental health counseling. And if you or any loved one has needed counseling of this type recently, it's really hard to find somebody that you can physically go see without a very long wait. So you can decide whether you want it or you're not. I'm going to say no to that. And then when I click continue, it's going to offer me a no wait dental. I'm going to just click off of that. And this is your cart. So here in the cart, you can see I can click here and apply. It's a 5-minute application. Customer does have to sign for the policy, which takes another minute. So it's a 6 minutes to take somebody from quoting to actually having an active policy. So what this shows here is for the first 4 months, my premium is going to be $275. Now, this is in Texas. What it's showing me also is that for term two, for the second 4-month period, I'm going to pay slightly more. It's about $14 more. Okay. And then for the third 4-month term in Texas, I would pay $302. So you can see the premium rises about $27 between the first 4-month term and the last 4-month term. I've got the prescription drug in here. And then I could start building a package, right? So I could add this plan enhancer that we've been talking about. Just understand the plan enhancer stands alone. You do not have to pair it with the short term. I'm just doing that now so that you can take a closer look at it. So because this young lady has a $5,000 deductible, now I could gap her deductible, or I could gap her total out of pocket, which would be 10,000. So I could do either one. And then, I'm sorry, this is 10,000. And then I did mention earlier, we did add this 10,600 to gap a bronze plan. So you could see here, you can really do a good job at gapping. In this case, I'm just going to gap the deductible, right? So when I click add, what I think I'm buying is a 5,000 per accident benefit. And it does have a $250 deductible, which reduces to zero in year 3. But I did want to let you folks know we're eliminating this deductible in December. So existing and new business customers won't have to deal with this after December. So I click add. Then it's going to ask me, do you want the cancer, heart, and stroke rider that matches, be the same $5,000 to get cancer, heart, or stroke? And we pay it out on diagnosis, not treatment. And then they can decide, do they want $5,000 once per year if they're sick and they're hospitalized, right? So I'm going to take both riders. I'm going to add that to the package. So as you can see, you can come up with a very robust plan that eliminates the customer having to dip in their pocket for an accident, cancer, heart, stroke diagnosis, or once per year. We're going to give this person $5,000 if they're sick and they're hospitalized. So I always like to talk about people's greatest fear. Like, hey, look, I'm about to put you in this bronze ACA plan. It has a $10,600 out of pocket. Do you mind telling me what your plan is if, God forbid, you're sick and you're hospitalized? Where's the 10,600 coming from? Right? And you all know 90% of your customers are going to be like, I don't know. Hope I don't go to the hospital. That's what I have to tell you. That's a terrible plan, hoping you don't go to the hospital. So, all right, I don't want to sound like I'm preaching to you here. I did also just very quickly want to let you know that we do have a great no-wait dental plan. Um, you could buy it today and you could use it tomorrow. It uses the Aetna Dental Administrators Network nationwide. If I pair this dental with any other product, I get a 15% discount on the dental. If I buy copay plan 2, which is our richest dental plan, folks, this dental plan has no maximum and no waiting period. Just let that sink in. No maximum, no waiting period. And the customer pays very set copays. So tier 1 is an inexpensive dental treatment. Tier 2 is an expensive dental treatment. So let's pretend you all had dental insurance. And I told you today at 3 o'clock, you need a crown. None of you would have any idea what that crown's going to cost until the person behind the front desk says you owe $600. So if I had this copay plan 2 dental plan from Allstate, I know for my crown this afternoon, I'm going to pay $500. When I make it to year 2, my copay drops to $350. Just something to think about. And then, of course, we have other supplemental products. Very, very quickly, we sell term life critical illness. Let's pretend the person you're talking to has a family history of cancer. The person sitting across the desk from you, if their family history is so bad, some people know they're going to get cancer, right? And this is something that you can get a high dollar amount for. We also have cancer, heart, stroke we sell standalone. Guarantee issue up to 30 grand. So, all right. I don't know where we are time wise. Oh, we're pushing it.
We're
Uh,
good.
what else do we have time to talk? Oh, I did just want to mention, I know a lot of you sell senior business. So if I go up here to the top and click quote senior, I'm not going to spend a lot of time here, but there's no wait dental plans here. Now it says no plans are available because this person's 38 years old. But if you have a customer who's 55 or over, there would be a dental plan here. It's no wait, and the richest option covers implants and dentures. So, and we also sell final expense life insurance. So we have a lot of insurance here at Allstate. Lewis, what else do you want to add here today?
No, I think the biggest thing, guys, and I've given you all the game plan for ACA on definitely handling the renewals. The question I'm getting, and you even asked it, Phil, at the very beginning, is, hey, when are we going to get to look at the 2026 renewal rates? And, you guys will know probably at the same time that I know. We'll probably get an email that says, hey, open enrollment or the window shopping is open. Hop in. Okay. But most definitely, guys, what's probably going to happen before, if they're going to stay in the ACA environment, we may be pushing a lot of people to bronze plans, save money on premiums, but with that, we're going to see no cost sharing reductions applied to bronze plans. So you need to know that. So they may have a 1,800 out of pocket, possibly with a silver, but they're going to pay a higher premium. You move them over to a bronze, you save them money. So you got to win. But where you got a loss is now you've got a $10,600 out of pocket times 2 if they're a family. So the plan enhancers, my go-to with Allstate, make sure you're quoting it out there and just throw it out there. I like Phil's question there. How are you going to handle this? Because guess what? The
Right.
hospitals are not going to write it off. They're not
But,
going to
nope.
just say, "Oh, sure." Especially with our current environment, with Medicaid being cut and all the cuts, these hospitals are going to want their money.
Right.
Okay.
I have one more tip.
Sure.
Not everyone's going to be a buyer for this, right? Like if you try to put plan enhancer on every single ACA case you sell, you're probably going to fail, right? But what you're trying to do is give the person the option, right? If you don't offer this, people never going to ask you for this product. They're never going to be like, hey, give me a plan enhancer to cover that out of pocket. It's never going to happen. So it's up to you to offer it, knowing that not everyone's going to say, yeah, sign me up for another $40 a month. 40 times 12 is whatever 40 times 12 is, 500 and some bucks, right? But 500 and some bucks is way lower than 10,600, right? That 10,600 is sky high, and 10,000 is the breaking point for a lot of people. Like they were good when it was 9,600 or whatever the out of pocket was in the past, right? 10,000, whatever it was. But once you crest over 10,000, that's a breaking point for a lot of people. And you all sitting in your chair right now looking at the screen, your average customer couldn't put their hands on $1,000 in an emergency, and they're counting on you to at least bring this up.
And I will tell you guys, Phil's 100% right. A lot of these people don't know that this is an option that you can insure for that out of pocket. And it's just a supplemental, and you can just throw it in there and just tell them, look, they're going to write you a check. They're going to reimburse you for an accident or write you a check if you're in the hospital. You're going to take that money, put it into your account, and you're going to pay your bills. Here's the rate. Let's go. Okay.
All right. Well, here's wishing all of you a strong open enrollment. Personally, this is my last webinar. I have run a lot of webinars, folks, and so today I'm kind of going in the opposite direction of you people, right? I finally get to take a break for a couple of days, and I just wish you all good luck in open enrollment. Keep these things in mind as you're going through all your ACA enrollments, and I truly wish everyone a robust fourth quarter here. And, I think we've got a lot of opportunities this year and a lot of challenges. So thanks for having me, Lewis.
Yeah,
And
no, I
thanks,
appreciate
everybody. Yeah.
appreciate you guys. Any questions for Phil? You can unmute and ask him. If not, guys, get ready for this weekend. I'm telling me and my team, life's over. We got 2.5 months to make a whole year's income. So, yeah, it's giddy up time.
All right. Rosie,
Okay.
Liz, thanks for thanking me. Everybody have a good rest of the day and strong open enrollment.
Thank you, Phil. Have a good one.
Bye
Bye.
now.